Hi, welcome back. You're still tuned into Markets Today on CNBC TV 18. It was quite a volatile session of trade, but by the end of it, it was directionless. So we ended absolutely flat. And in fact, in some of the large cap names like HDFC, ONGC, HUL, etc., there was a bit of profit taking that you saw today. But how are the technicals stacked up? Sushil Kedia, the president of the Association of Technical Market Analysts, does not rule out the Nifty slipping to 7,700 levels in the near term. He also says that it is unlikely that the Nifty will breach 8550 before it slips to 7700. Take a look.
On the Nifty and Sensex, I would put it this way. Sensex looks unlikely to go past 28,250 before it goes back to 26,000. And equivalent on Nifty perhaps is 8550. Unlikely to be breached before we go back to 7700 maybe. Before going past 8550, we will perhaps go down to 7700. And perhaps before we go below 7700, we'll go back to 9700. Before INR goes past 67, I see over the next 10 months to 12 months, maybe it is going down back again to 57. The dollar is going down to 57. In fact, the INR USD chart in the long run has a very unique sort of an interesting pattern. You know, that area between 55 to 58 is what I think over the next many years will be getting revisited again and again. Despite the fact that, you know, INR over the long run, over the next 2-3 years, will keep making new lows.
Okay, a number of stocks were buzzing in trade today. For a check on that, let's go across to Mangalam Malu. Mangalam.
Well, indeed, thanks a lot for that. A lot of stocks were buzzing in trade today. We started with HOEC. That one ended high by about 11% in trade today as the ministries approve commerciality of development plan for the Dirok discovery in Assam. Remember, HOEC has about 26.8% stake in the Dirok discovery. Kelton Tech Solutions was another stock about 15% higher in trade today as the company is said to be in final stages to acquire a US-based IT solutions company. The annual revenues of the IT solutions company is $40 million. But a couple of stocks reacting to the numbers that came in post-markets yesterday. We have NRB Bearings. That one was down 8% in trade today as the EBITDA for that one was down 27% at 21.5 crores, and also the margins contracted from 18.7% to 13.8%. Honda Sail Power Products was also down about 6.5% in trade today as the top line growth on that one was muted. Remember, the total income came in higher just by 0.8% to 184.5 crores versus 183 crores. And ahead of results, a couple of stocks were buzzing. Dolphin Offshore and Sonata Software gained about 3.5%, while Sakti Sugars lost about 2% ahead of earnings. With that, back to you.
All right, Mangalam, thanks for that. Well, Asian Paints slumped a bit in trade today on the back of a very subdued set of numbers that the company reported yesterday. Pragya Bharadwaj joins us now with the brokerage views on the stock. Pragya.
Thanks a lot for that, Sonia. I'm going to start with CLSA. That's maintained a sell rating on the stock. Their below consensus target price stands at 675. They believe that the impact of the weak macro continue to weigh on Asian Paints Q4 performance. The high volume base and tough macros will pose headwinds for the company in the first half of FY16. JP Morgan has a neutral rating on the stock with a target price of 750. The margin tailwinds will now stand at a risk for the company given the uptick that we've seen in the crude prices and currency depreciation. They revised their FY16 and FY17 earnings estimates by about 10% lower. They expect the stock to trade weak in the near term given the kind of uncertainty that we've seen in demand. Macquarie, however, is a lot more optimistic. They've maintained an outperform rating on the stock. They've lowered their target price marginally down to about 890 now. They remain optimistic on the volume recovery for Asian Paints, which is why they're building in 28% earnings on a compounded basis up until FY18. The paint volume growth rate is highly correlated to the GDP growth recovery, which Asian Paints will be very poised to leverage once it happens. They're building in a 13% volume growth for FY16. And HSBC has a buy rating on the stock with a target price of 925. They believe that the temporary blip in the volume growth should not mislead the investors, and this kind of weakness in the stock price should be used as an opportunity by the investors to accumulate this strategically, and structurally very attractive name. Back to you.
Thanks, Pragya, for running us through that. Now, the Indian Met Department may not be too optimistic about the possibility of a normal monsoon, but the Sky Met is confident that the rain gods will not disappoint this time around. The private Met forecaster says historical data shows and points to the possibility of a back-to-back drought being next to impossible. They claim their internal projections are pointing towards a normal monsoon this year.
There have been only 3 back-to-back droughts since 1873. 1905, 1965, 66, and there was a triple whammy of 86, 87, 88, where we had back-to-back El Ninos in 86 and 87. Even if I don't take El Ninos, I just look at the dispersion of droughts. The probability of a back-to-back drought is very low. 2014 is a drought year. It was 88% of the LPA. So that is one way of looking at it. Second, all our programming, that is the computing, is pointing towards a normal monsoon. It has been pointing towards a normal monsoon since January.
Okay, that's good to hear. An optimistic view on the monsoon situation. With that, it's a wrap on this edition of Markets Today. From Rima and myself, thanks for watching. But we leave you with these images of the latest Tata Motors product, the much-awaited Gen X Nano. The new range comprises 5 variants, including 2 automated manual transmission variants. The manual range starts from 1.99 lakhs ex Delhi and 2.1 lakhs ex Mumbai. The automated manual transmission variants range from 2.7 lakhs ex Delhi and 2.8 lakhs ex Mumbai. This is Tata Motors' last-ditch attempt to revive the Nano brand. With that, it's a wrap on this edition of Markets Today. Thanks for watching.